Today we're going to take a closer look at your favorite semiconductor company. No need to deny it, I know it's Intel. Intel was once known as the king of the semiconductor industry. It is now seen as nothing more than a bench player. But can it turn things around? Well, let's learn a little bit more in today's episode.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
First, it is essential to understand what Intel is and how it makes its money. Intel is a semiconductor company known mainly for its CPUs and processors that go on everything from laptops, desktops, tablets, and now even data centers. Now let us talk money. During the company's latest earnings report for Q3 of 2022, it made roughly $15.3 billion. $8.1 billion is from its client computing segment. These are usually processors that go into laptops or desktops like the recently released Intel 13th generation. $4.2 billion from data centers. Revenue here is mainly coming from its Xeon processors, which are used to power colossal data centers like Amazon AWS, Microsoft Azure, and even Google Cloud. Next, we have $2.3 billion from network and edge. These are hardware and software solutions for networking like 5G and Internet of Things products. The final three segments are so small that they are not making any significant movement to the company's top line number, but are essential for future investors, especially the accelerated computing system at $185 million and the Intel Foundry business $171 million. But we will talk about these later. Now that we understand the business, let us find out where things started to go wrong for Intel. But first, if you are enjoying the episode, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Finally, if you are here, it means you are a semiconductor investor. Make sure to check out my weekly podcast on the semiconductor market. A great host, a lot of great kind of topics that we discuss, so that should be on the pinned comment or click above. Here are a few charts showing Intel's historical market share. First is an image from Omnidia Research showing Intel's vast lead in the server market from 2010 to 2018 or 2019. Next is a chart from CPUbenchmark.net showing AMD and Intel's market share made from thousands of performance test benchmark results. It might not be an accurate representation, but it shows the general market share. And very similar, Intel had a solid lead from 2012 to 2018. So what changed in the late of the 2010s? On June 2017, AMD released its first EPYC server CPU based on its newly developed architecture. On 2019, it followed up with the second generation. Fast forward to now, and AMD has released its fourth generation, Genoa. This has caused and is causing a lot of pain for Intel's server side. On the consumer end, Q1 of 2017, AMD released its first generation of new consumer processors from the Ryzen line. Second gen in 2018, third gen in 2019, fast forward to its fifth gen that was just recently released at the late of 2022, the Ryzen 7000 series. Again, causing pain for Intel, but this time in the consumer segment. Many might say that Intel got comfortable with its colossal lead and didn't have much motivation to innovate as it did not have much competition. Once AMD started to innovate, it was too late for Intel. Now the tables are leveling out again, with recent products from Intel becoming more competitive with AMD products. But unfortunately, it is happening at a rough time. As we see from its recent earnings, its client computing segment is down over 17% year over year, and its operating income is down 54% year over year. The current macroeconomics is causing vendors to do inventory correction. The cost of transport and manufacturing is increasing as inflation continues to go up, slowing down orders and reducing the average selling price of products as companies go on a pricing war as well. So how is Intel trying to turn things around? First is the continued investment of its processors. As I mentioned earlier, Intel products are not necessarily bad. They are still very competitive. But the company does not want to be competitive. It wants to be the best. Unfortunately for Intel, developing new architecture takes time, roughly 3+ years. The risk here is that AMD is also growing and is not stopping. Looking at Y charts, we can see that Intel spends more money on research and development, but AMD wins the growth rate. In the past 3 years, AMD's R&D in the trailing 12 months have grown over 180%, where Intel is up only 28%. The second thing Intel's trying to do is enter the GPU market. Based on AMD's 2022 Analyst Day, the long-term total addressable market for data center is roughly $125 billion, $64 billion alone from the GPU market. I believe Intel wants to get a piece of this pie. The company has recently developed its first consumer GPU and data center GPUs, and as expected for a first gen, it needs to get better. The big risk here is there are some strong players in this space, mainly the monster of NVIDIA, which holds the majority of the market. And unlike what Intel did in the past when it got complacent with being the leader, NVIDIA continues to take huge leaps in performance and technology every generation. Remember, in its most recent quarter, this was a $185 million revenue segment, so it is pretty small. The final plan for Intel is rebuilding its manufacturing, and it wants to build chips for itself and other semiconductor companies. The problem here is that this is an expensive market to enter. We recently saw TSMC announce 2 plants in Arizona, which would be a $40 billion investment. Luckily for Intel, right now might be the best time for its manufacturing endeavors, as numerous countries are creating incentives to build manufacturing plants on their front steps. Outside of the major costs for this expansion, there's also strong competition from the likes of TSMC and Samsung. Out of all the future growth opportunities, the one that I believe is the most riskiest is the manufacturing side, as it brings tons of financial risk if not executed correctly. So can Intel turn things around? I believe if Intel focused only on improving its chips and entering the accelerator market with GPUs, my answer would lean more towards yes. But adding the manufacturing side increases that risk dramatically. The company is acquiring Tower Semiconductor to improve its manufacturing knowledge, reducing the execution risk a bit. Still, this is a huge push, and while it can turn things around, this manufacturing side just made it a bit harder for it to do it. On the bright side, if executed correctly, the company can provide great return to investors. Remember, Intel has been dead money for the past 5 years. It returned negative 44% during that time frame. AMD in the same time has returned over 500% and NVIDIA over 200%, even with these massive downturns. What are your thoughts of Intel? Is it still dead money?